Crypto markets bounce off key levels as geopolitical tensions look to be easing. Cross-asset macro vol resets lower as focus shifts to tech earnings. Skew flips back into neutral as short-dated options are signaling less panic and the potential for a move back to the highs. All this and more in this week's Crypto Options Unplugged. Hey everyone, welcome back to Crypto Options Unplugged. It's me again, Imran Larka from Options Insight, and I've got my man Dave Brickell from FRNT Financial. Don't forget, like and subscribe to this podcast so that we get it out there to as many people as possible so we can help keeping you up to speed on what's going on in crypto and how to navigate these crazy markets. So, speaking of crazy markets, what are we thinking now?
Well, firstly, we should say happy halving.
Happy halving, yeah. It's out the way.
It's out the way, yeah, so that we can kind of get on with our lives a little bit after.
Although I'm not sure the miners are that happy, given that their revenues just went in half.
Yeah. Although you see the spike in fees though that we saw on for the miners, but yeah, like I think we've spoken around that before in terms of. Obviously, they'll all be hoping that price improves, but you probably are going to see some kind of consolidation around that industry.
Riot killed it yesterday.
Yeah,
it's up like over 20%.
Yeah,
right?
yeah.
So I think a lot of the weakness looks like it might have been priced into the halving.
Yeah.
But I don't know if there was any specific piece of news on Riot, but it was on fire yesterday.
Yeah, and it might be just seeing it's not just the sort of block rewards, there's the fees and all that element of fees into it as well. Mm-hmm. Yeah, and they've been sort of massive laggards, I guess, as well. The sort of miners.
Yeah.
But it's still always feels like a landmark moment, and I think as we discussed, that there was no reason to expect anything to happen around the halving, and we kind of haven't. And then it typically sort of plays out over the next sort of year, 18 months that you'll see like the kind of bull market sort of follow. I don't see any reason why that dynamic necessarily changes either. Everyone's talking about are we going to see like a truncated market and all this stuff, partly because we saw the record highs before the halving, which we hadn't seen before. But I think there's we've actually come a long way since the last halving when you think around like the ETFs and some sovereigns that have kind of adopted Bitcoin.
And also that Bitcoin has shown itself to be resilient in the face of like a lot of weakness and without anyone supporting it. Do you know what I mean? It's like, if the stock market did what crypto did in that horrendous time when, FTX was going bust and all that stuff.
Yeah. I mean, even like as much as I've like believed for a lot of years in like the kind of fundamental story around sort of crypto as this like this pristine collateral story and this, the currency debasement sort of story and the fact that we can never get out of that. That thing's huge. The questions I did have around it would be, I mean, God, in the early days, does it get banned, and stuff, and we're way past that now. And then the other thing also was, how do we survive in a high interest rate environment? And that would have been because, for a lot of people, it's like, look, this is just a pure just liquidity play and low interest rate play. It's kind of a long duration asset. It will get killed as soon as they hike rates, and it kind of did. But now we've hit record highs with rates at 5.5%.
Yeah.
So it kind of keeps answering the question. It reminds me of like the what's the mythological the snake where you keep cutting the head off and it grows two more back and that kind of Lindy effect, the longer it stays around, the greater its chance of success. So, yeah, it's come out like battle hardened. We're seeing institutional adoption. We've got the ETFs. So we're in a much, much better place than we were from the last halving. And then also from the last halving, we went to the last halving with rates at 0 doing QE. We're now at rates at 5.5%, still in the process of quantitative tightening. And we're moving towards the rate cuts and the end of QT and eventually QE. So actually we're moving into directionally what will be an easier rate environment and more supportive sort of macro environment from that sense. So I would say there's even an argument to say we could have an extended sort of bull market rather than a truncated one.
Because you've got so much juice in rates to take back out, right?
Yeah, and now like through the ETFs and what have you, we've now kind of just opened up a whole new capital pool to come into this space. We still haven't, for like, and I'll kind of, which I should be careful about, I'll casually talk about institutional adoption, but we still don't really see any institutions come in any big way. It's still mostly sort of retail, high net worths.
It's a very slow moving sector, isn't it? Yeah.
Like Morgan Stanley were talking yesterday. There was a report yesterday or today about Morgan Stanley offering Bitcoin as part of some of their funds. I mean, that's like a $1.5 trillion asset manager. So it's coming. It's all coming. So we've got all that to play for. So yeah, I think the guys at FRNT sort of put out, I think we were up like 550% since the last halving. So we kind of get all caught around the noise of like the intraday sort of volatility and swings, but if you step back in the big picture,
who is it? That guy? Oh, what's his name? With that stock to flow model.
Oh yeah.
Is that guy? Remember his name?
Yeah, no, I know exactly who you mean. Yeah, it'll come to me. Yeah.
He zooms out. His chart basically it's like a step function, right?
Yeah.
He just zooms out and he's got it on a logarithmic scale, and it's just like that's kind of what you're looking at. The halving. If you look at the halving cycle and you look at it all zoomed out, you're just doing this stair step higher, basically.
Yeah, and like from the macro, say my big picture macro, and I get accused at times of being like just perma bullish on the space, and I like long term
Plan B,
that's it. I was thinking because the artist plan B as well. Like long term, it's like I just don't see how this kind of currency debasement angle, like how we get out of that, how we how
we don't.
Yeah.
So let's be clear to everyone. We don't get out of this fiat currency debasement. This is ongoing for the rest of our lives, basically. Yeah. Right. There's no way out.
So it's just like the sort of perfect way to play that over time, and if you've got a long enough time horizon on it, like I think you're going to do well. And that even runs for stocks and that as well. Like Nasdaq at some point will be at 20,000, then at 25,000, and again it's all because that denominator, the currency, the dollar, is coming lower. And again, this isn't about the dollar, because I still think the dollar is probably like the cleaner shirt out there.
I was going to ask you about the dollar, because you put out a nice chart in your crypto club note this weekend about how the correlation's gone quite negative, right, with Bitcoin and the dollar. Yeah. Like in terms of where that trades in its range, like it's quite negative right now, and the dollar's sitting up there on its perch, up at 106 on DXY. So if this thing has a little bit of a move back down to 104. I mean, that could be the next thing that propels us higher, no?
Yeah, so it's worth talking about that. So I think a lot of this year we've had very idiosyncratic narratives driving sort of Bitcoin, largely like the ETFs and all that stuff. We do have a supportive macro backdrop in that, we've seen like liquidity, sort of global liquidity, like really pick up, and really that's been picking up over the past year since like the end of 22. We've seen liquidity pick up, and we are moving directionally towards this rate cutting cycle. The ECB are set to go in June, probably Bank of England. Fed now it looks like we've pushed out till like maybe September. I still think they're going to be cutting, or at least they're on hold. At worst, they're on hold. So we're still moving into this environment, but that macro had kind of taken a back, a backseat to what's been going on in crypto world. Now we're kind of through a lot of those narratives. Now I think we're kind of reconnecting with the macro a bit. So rates and dollar are two important drivers. Rates, obviously, US yields have been moving higher, and I think that's been a headwind. But I've spoken about, I don't think that's a major issue, given that I feel that kind of real rates, if you like, are still coming lower. Because if I think about the Fed, their reaction function seems to be a bias towards wanting to cut rates. they'll only keep them on hold if inflation stays higher. So either inflation stays higher, nominal rates stay where they are, so kind of real rates are lower that way, or as soon as we start to see inflation roll over again, then they're going to be cutting rates quite quickly. So I don't think the rate angle in and of itself is such a big deal.
I saw a piece about the level of 10-year rates at which stock market really cares.
Yeah.
I can't remember which bank was talking about this. It might have been Goldman's or someone, right? But basically they're saying that at 480 on the 10-year, that's like that's territory where the stock market's just not liking that.
Yeah.
And so if stocks do start to dump, and we've seen, right, whilst the AI narrative in stocks has calmed down, stocks are not now insulated from moves higher in yield. So as we get days where yields move up a lot, stocks get sold, right? But then as you get that stock panic to the downside, then you get the reflexive feedback loop of people buying bonds again.
Yeah.
So it's like whenever rates get to 470, 480, stocks get sold and then bonds get rebought, so then yields come back down.
Yeah.
So it's like this cap on yields effectively at like 480.
Yeah, and I think like we discussed last week about bond volatility, so I think that's more important than the absolute level of yields in my mind. So we saw last week like the MOVE index, which is a measure of Treasury bond market volatility, that spiked. And why that's important from a liquidity point of view is like US Treasuries are basically collateral that gets used to take leverage to go and invest in riskier assets. So when the volatility in that picks up, then the haircuts that get applied to that Treasury collateral increase, which means that you can take less leverage, which is essentially reducing liquidity in the system. So you kind of want to see the volatility around bonds more so necessarily than the actual level. But with the other thing right now is that there is a sensitivity around this debt sustainability issue in the US. So I think Yellen and they don't want to see bond yields go much higher because again it's keep forcing them to have to fund everything through the front end. I think it's leading us to they're going to have to do some form of yield curve control. Like the Treasury already planning to do the buybacks and all that stuff. So I think there's a limit in terms of how far they'll allow yields to go, which is going to annoy like the sort of bond vigilantes out there. But the Treasury and the Fed, if they want to cap it out, they will cap it out. And I think they'll try and do it through, and that's why I think as well that the Fed will keep rates on hold because, if you think of like longer yields, kind of really a function of where front end yields are plus a premium, like a duration premium, then they'll want to kind of keep the front end anchored at least to stop that going up. So I think there's all those games to be played. Again, the system can't handle when the US are running these huge deficits, they can't handle higher rates. So something has to give. So either they start, imposing some fiscal discipline, but then they'll tank the economy, or they keep on playing the games they are, but then financial repression comes back into it.
There's definitely not going to be fiscal discipline into the election though.
No, exactly right. So they're gonna keep handing out the free money to everyone, and then they're gonna have to, in terms of the financial economy, they're gonna continue to this game of financial repression, which is artificially keeping yields lower from where they would otherwise be. Which is why then it comes back to the currency debasement and all roads lead back to Bitcoin. So that's kind of the big picture on it.
What about this week? I mean, we've got macro, we've got GDP and PCE data, right? So PCE inflation, obviously that doesn't seem to be that market moving these days because the CPI is what the market moves on, and then that kind of sets everyone's expectations for PCE. So I think people don't care that much about the macro this week. Geopolitics is dying down. Vols have started to come down everywhere.
Yep.
Like that spike on the MOVE index has started to mean revert already. Precious metals vol, oils vol, equity vol, all of it's coming down. And that in itself kind of creates a bit of a updrift for markets. So we seem to be having that yesterday and I don't know where we are today, but the big tech earnings is what it's all about this week for equities. Right?
It is. All these things as well, I just feel they're very like short-term drivers as well. Like again, if I step back, like big picture, like when the US are running like the deficits they are, and the deficits increasing like $1 trillion every 100 days, right? If you think of that as really as like cash being created and coming into the market, Like you just, you know, you're fighting this tidal wave of liquidity constantly. And that's before you talk about what China are doing, what Japan are doing. So there's so much liquidity in the system, and it needs to find somewhere to go. So now and again, we get these little disruptions, be it around data, be it around earnings, where that money moves to the sidelines for a bit. But then it needs somewhere to go, and then it kind of comes back into the market. The interesting thing, so yes, like this week, earnings is going to create some volatility, and obviously we're very leveraged to the Mag 7 and all that stuff. But then once that dies down, I do feel we've probably moved a little bit too far now in that, like, the market's almost become complacent in we're moving towards this reflationary regime. Fed aren't going to be able to cut rates. We're kind of pricing that out. So actually, I think there'd probably be greater sensitivity if we get like a weak PCE print or weaker GDP print. Like, there'll probably be greater sensitivity to softer data because we've priced the Fed out so much. At the same time as well, I still think we're in a world where the Fed are on hold at worst, like, or they're cutting rates. So like there's kind of limited scope. Yes, we can maybe price out from 2 cuts this year to 1 cut, but like that's the thing. But there's a chance we quite rapidly pricing like 3 cuts. So I think there's that. There's also as we get through the earnings results and the blackout period for stock buybacks, which is quite an important driver of stock markets.
That's ending now, right?
So they come back in, and Bitcoin I think is kind of a little bit kind of brought back its correlation a bit with stocks and risk generally. So I kind of feel that if stocks kind of bottom here, which I kind of think they will, because it looks like maybe the dollar's kind of topping out a little bit. Yellen made the comments last week, you know, joining the concerns around dollar strength. I think they're going to be incentivized to just kind of keep a lid on yields. So that kind of macro thing, I think, should just start to calm down stocks. I think we'll probably sort of find a low around there. Then risk generally performing better, and Bitcoin then I think will have a good kind of base to kick on and start making new highs. And I will say, someone picked me up on this, said, "Oh, hang on, but you said that Bitcoin's become a risk-off asset," and I had to kind of caveat that with, you know, Bitcoin's capturing the tail risks of this market. So if there's a big blow up, if the treasury market blows up and yields go up 5% and we're worried about the treasury market, I think Bitcoin will actually rally in that instance. And you know, if banks start going under and all that sort of stuff, Bitcoin that's when it becomes a safe haven. We're kind of somewhere in the middle. We're kind of in this almost drift, like stocks are a little bit under pressure, come off from the highs. All the bears are starting to like get excited, but they're going to be disappointed again because, say, there's just too much liquidity in the system. So
what about so I agree that the macro at the margin does seem to be turning a bit better, just at least as a tactical trade. Are there any things on the crypto horizon that we need to be aware of? Because if the macro is supportive, you know, the halving's done, but that was not a digital event. It's like generally going to lead to, you know, months worth of bullishness, but we just don't know when it's going to really accelerate. It's impossible to predict. Is there anything else on the crypto side that we need to be aware of that the market might focus on?
Like, I mean, we're starting to see the ETF flows turn positive again. So that's again can help sort of like combining with the halving, that becomes a positive story again. Obviously, you've got the spot ETFs in Hong Kong that will be going live over the next few weeks. So we'll see how that goes. Counter to that, there's more talk that MT Gox are getting ready to distribute to their creditors.
That never really seems to impact it for very long, or even you can't even really ever see the impact of these guys selling. So remember, you know, when Genesis and that dumped a load, it impacted for how long?
Yeah, and there's a new buyer in town in these markets in a way, like through the ETFs. So again, they're very kind of short term sort of stories,
short term blips that people use to buy the dip, right?
Yeah, exactly. So yeah, I feel we're quite constructive at the moment. I want to see us like kind of break above that 67k like level.
I was thinking 70k. When we get back into the 70s, then we might get that acceleration.
Yeah.
Because it's done a bit of consolidation. And it's been a textbook consolidation. We were talking about it last week, right? that we thought it needed to break below 60K to kind of, otherwise it was just too obvious that it's going to hold that level and be a horizontal range that it would just consolidate and then make the next leg higher.
Yeah.
But if it takes out 70K, or maybe 72 is the top of that range, if it takes out 72K, then it's kind of an easy trade that it probably tests 80. Right?
Yeah, it's game on. And like, like we said about needing a flush. We had 2 flushes really below 60K. We got another one, I think, after we spoke last week, maybe, and it tested down and it couldn't hold below that. And now we kind of back around that 65K level. There's clearly like resistance, like to try and, or as we like around 66K, like to kind of break higher. But I think we clear that. Funding's like negative on a lot of exchanges now, so positioning's actually short effectively. So I kind of think it's under-owned again. Like the sentiments seems a little bit bearish still. Everyone was looking, again, everyone started talking about 50K levels and all this stuff. So all of a sudden, because I think most people have like, certainly like the view you've got where like longer term, like you're bullish, all of a sudden everyone starts getting like cute around the levels they're going to pick some up. And then next thing you know, it's 66K, then you're at 70K, and then oh shit, we need to go chase this. And then
I'm kind of relieved.
And then you get the FOMO moves.
Kind of relieved I covered all my shorts like I told you last week, right?
Yeah.
Just like, because I knew that even if it dipped, and even if we were right, it was going to break 60K and have a little dip.
Yeah.
I probably wasn't going to be behind my screen ready to buy that dip and to trade it, and it was going to be so short-lived. I was like, I just need to I need to be a bit more like you and just trade the big picture, I think.
Yeah.
And then maybe still use options to kind of tactically trade around a bit, but just not. I didn't feel the need to be particularly well hedged at that point.
Yeah.
Right?
Yeah.
Even though I thought we could break that support zone.
Yeah.
Yeah. But anyway, let's jump in. Remember, don't forget to like and subscribe if you like this content. Let's jump in and see what I saw in options market this week. Okay, so looking at what's been going on in crypto vol this week, we have obviously had some big drops the previous week around all the geopolitical tension and fears. That has somewhat subsided. So you can see on Ethereum, it's particularly kind of more dramatic. We saw these sort of 7% drops 2 days in a row, big snapback rally. As you can see, the kind of moves has tapered off to more like sort of 2 to 3% type moves. Realized vol hitting highs of about 100 is back down into the mid 80s. So clearly seeing it calming down. It's still not a low realized vol, but that's on a 10-day basis back into the 80s. If we were to look at it on more like a 5-day basis and you take out completely those big moves, then it's much more normal from what we're used to seeing. And it would probably be back more in the sort of 60s type range, right? And we are seeing implied vols kind of reacting to that by basically coming lower. So you can see the Bitcoin curve here. This is the term structure. Similar story in Ethereum. Really the front end getting hit. So you can see a week ago we were a bit inverted. We have come down. So the green line is where we are now. We are starting to invert. We're starting to go back to contango, that is. So we're back in the mid 60s in Bitcoin front end. And I suspect if we continue to kind of find a range as we are, we're going to see that front end come down even more and go into a bit more of a contango like we have been used to seeing in the past. So that's what we're looking at in terms of term structure. Moving on to flows, we can see continued hedging activity on the downside, generally focused around April, but also seeing some May activity as well. We saw some strikes bought in the kind of 60K to 55K range here, April being the pink ones. We did see some call buying as well in the front ends. You see some April calls bought here and also the 70Ks. Those 70Ks are providing a bit of short gamma on the upside there. So now that we are seeing a bounce in crypto markets, there is a chance that some of this April calls that have been bought into Friday might drag the market a little bit higher. And then looking longer dated and a bit higher strikes up here, we've got a lot of call calendar activity going on. But generally, people selling longer dated strikes in the kind of 90 to 100K area and then rolling them down into things like May 80,000s to try and get a bit more gamma and a bit more leverage to an upside move if we were to get it post-halving, now that the halving's out of the way. Ethereum, the flows, we're seeing a similar sort of story. Protection buying, generally, we're seeing that 3,100 down to 2,600 area in April. We did see some call selling in 26th of April and 3rd of May on that 31 and 3,200 call zone. But then we also saw some out of the money call buying in the 3,400 calls here. But generally, two-way flow in April, primarily on the block trades. And then the more interesting thing in the flows for Ethereum is probably the rolling of these overwrites. So we had April calls being bought back in good size on the 3600 April, 3550s, 3500s, and then a reselling large clip of the 36 calls in May. So that's an overwriter just buying back April that wasn't worth much anymore. Remember, they sold those to fund some put spread longs in June, and they're buying back those Aprils to resell some May. So we are seeing overwriting flow coming back in Ethereum. People comfortable to supply some of that upside still because they don't really think the bull narrative comes back with a vengeance on Ethereum in the near term. And then closing out with crypto skew, obviously skew all over the place on the geopolitics, really spiking into a deep put premium. But you can see it's pretty much reversed all of that on the 1 month. We're down to only a 2 vol put premium on Ethereum, and Bitcoin's given up all the put premium to go back to a call premium. So Bitcoin telling us, the skew at least telling us that Bitcoin's going to drive the rally in the near term. In the long end, we do still see a call premium across both assets, up to about 5 vols in the back. But the 1 month skew is telling us that people are still thinking if you're going to get a move back to the upside on crypto, it's going to be driven by Bitcoin. All right, that's what I'm seeing in crypto vols this week. All right, so that was what I was seeing. What do you think?
Yeah, interesting. Quite interesting about the negative gamma into this Friday.
Yeah, it has dropped a bit in Bitcoin. Like I think it's like 60, 70 million short, which is reasonable.
Yeah, because I'm kind of thinking like it feels like to break those 67k levels and stuff, we need a little bit of a spark. It might just come from equities and risk and what
dollar.
have you. But
need to get that dollar down to 105.
Yeah, get the dollar down. Actually, as well, we didn't cover in the macro, but I still think dollar China, like they're kind of sat on it, and I still think when they're sat on dollar China, they're sat on Bitcoin because they don't want they want to discourage those capital outflows a bit. But if we can see that I think itself could be a spark. But yeah, like it kind of feels like momentum wants to build, but it needs a trigger, and maybe a good old fashioned gamma chase on Friday.
I thought it was interesting that the Ethereum call sellers are back though. Like they're not shy, right?
No, and it's like obviously a strategy they've got. I mean, again, the one thing with that is then it turns and they seem to panic out of it pretty quickly.
They do cut quite quick as well.
Yeah. So again, it kind of makes me think that the bigger moves again will come to the top side, like in what we've just seen. There's still people sort of bought some downside protection. And it still just feels like we're under own for like a sort of huge risk. Even everyone's sort of buying call spreads and stuff like that. So it just feels the market's positioned for not much to happen.
Yeah, I mean, I saw there's an interesting chart that Tony Stewart put out on Deribit Insights that I retweeted this morning, and it kind of shows how for the last few months, excluding the last few weeks, since the start of the year, you had a very positive spot vol correlation in Ethereum vol, right? And you had it in Bitcoin as well, but Ethereum also, when it broke to the upside, vol went bid with it, right? But then as we broke below 3,200, that flipped completely, and we obviously saw the sell-off down to 3,000, and vol went up with the sell-off. So you had this big flip in spot vol correlation as we went through 32. So and then vol has come back down off the highs, but it hasn't completely, it's still got some juice to come down, I think, right? So I think we're in this kind of sweet spot near 3,200 where from 3,200 to 35,600, we're probably still going to see vol lower with spot higher. But then if we break back above 37s, then we go back to that old regime that we've seen all year of spot higher, vol higher. But I think we're in this pocket between sort of 32 and 36 where you may see a period of crypto vol just get smashed again, right? Because we don't just blast through the highs in aggressive start. Certainly in Ethereum. Bitcoin, I think, could be a bit more aggressive to the upside, and it does look like the skew's kind of trying to tell that story. But yeah.
The interesting thing with Ethereum for me is, obviously, I mean, you say about potential things going on in crypto, like the May ETF decisions will be interesting. And again, from a pure risk reward trade-off, like everyone's kind of written that off in a way now. That's not going to happen. So
it doesn't need to sell off on it, basically.
No, and there's a chance that there's something more positive out of it, like in my mind. The other thing as well is the halving has typically sort of seen ETH start to outperform Bitcoin. Now again, these markets, the structure of these markets will change very quick, and we've only we've not got a huge amount of data really to kind of go on. But what we have got is ETH has always started to outperform. So even whilst now I'm not sat here thinking there's like an obvious catalyst for ETH to start outperforming Bitcoin in any material way. Again, like everything in my experience tells me it's there the times when you just become very complacent, like in a trade, that all of a sudden things turn pretty quickly, and then price drives narrative and things look quite different. So
the ETH vol did hold up better than the Bitcoin vol this week.
Yeah.
So if you look sort of in that, because I think I mentioned it last week, I was like saying in the 2 to 3 month bucket, owning ETH vol at like 2 vols over seemed like a bit of a no-brainer when it was realizing 15 over.
Yeah.
And so that did catch a relative bid. So whilst Bitcoin was drifting, ETH was slightly bid in that June area.
Yeah.
So that the market's priced that back up to about 4 or 5 vol premium.
Yeah.
So yeah, that is a little sniff, a little whiff that some people are seeing some value in owning some ETH vol, even though the narrative isn't quite there, even though the spot price action isn't quite there. Like you look at the ETH Bitcoin cross, it's broken below support, and now it's kind of, it looks like it needs to retest the lower support level before it can really bounce.
Yeah.
But yeah, I hear you. I mean, I do think because you're very much a big picture guy and you like to zoom out, anyone who's looking 6 months out or more needs to be like owning some ETH and needs to be loading up on some like upside or something, right? Because that is clearly the value trade. After we've seen the realization of the Bitcoin ETFs, we've seen what it did. If we're going to get anything like the flows that we saw in Bitcoin, and even a fraction of them, because of the less liquidity in Ethereum, the impact it's going to have on Ethereum is going to be immense, right? Plus, everyone's going to be front running the story like crazy. So, and right now, no one's pricing it because everyone's like, oh yeah, it's not going to happen in May. But just because it's not going to happen in May doesn't mean it's not going to happen by the end of the year.
Yeah.
So I think once we get a date, as soon as we get a new date, like you said, it might be that we don't get it, but just by putting a new date marker out to September or wherever it is, that in itself is quite bullish because it then gives everyone some optimism that, okay, now we know it's very likely to happen by then, so let's go again, right? And we probably do see it as a bullish catalyst.
And the other thing as well is like, if I think around like the alts and obviously Solana's like led the outperformance of everything, and was kind of like the golden child. That star's sort of just dimmed a little bit over the last couple of weeks with some of the issues that Solana's had.
Got hammered. Got down to like 120 again, didn't it? So 130.
Yeah, I'm not sure quite that low.
I think it got pretty low.
Yeah, and on the I did actually pick some up actually on the geopolitical headlines, but purely because I was like, again, want to fade geopolitics never lasts and leads to more spending and all that stuff.
The vol in Solana is like 125, right? I mean, it's pretty expensive when you look at. Well, I mean, it moves. It does move.
I was going to say, is it realizing though?
Yeah, I mean, I can't remember exactly what the realizing is right now, but yeah, you can trade out to May right now. So you can trade at like end of May options. So for me, like I'm a bit more big picture Solana.
Yeah.
Like, I don't really want to trade it tactically, and it's so noisy and so volatile. But like, if I could trade like end of year options on Solana, then I'd probably be getting some upside exposure.
Yeah, it's interesting. But yeah, so like. I don't know. I always feel like ETH like seems very unloved, and I kind of get in some reasons why, but it's still like the sort of main chain that things are getting built on, and it's kind of not going to go away. And then it's still the one that we're looking at the next ETFs that are going to be launched on. So yeah, I just feel there's the opportunity there for that to really at some point have its move. I just don't know what the trigger's going to be, and it might strangely be, into the May decision around the ETFs that whilst it doesn't look like that's going to get done by May, like if there's a positive development out of that makes everyone go, oh shit, hang on, we've kind of completely sidelined this, and actually we are probably, you still got Larry Fink saying like either way we're probably going to have these. He's got a good track record of getting what he wants
that's right.
done, like so, and then all of a sudden we have to kind of price that narrative in again, combine that with the fact that post halving ETH typically like does quite well, and then also we talked about like the liquidity angles that a stronger dollar is a tightening of liquidity in the system, bond volatility, is a tightening of liquidity. Those things start to ease. The dollar starts to sort of roll over, which I think it tentatively looks like it might be. Bond volatility calms down. We've certainly massively off of the spike that we saw last week. Then system liquidity starts to pick up, and then I think of like the altcoins as being like these kind of liquidity play. Like Bitcoin is very like the core sort of macro play, but when it's just about kind of risk on, liquidity flowing in, then you start to probably see some alt outperformance, and that's where ETH I think could again start to pick up. But we'll have to see how we go on that.
All right, so I think key takeaways then, the macro does look better. Looks like these geopolitical tensions have calmed. That's a good thing. Obviously, the halving's out the way, but don't forget about ETH, because whilst it might not get the news you're looking for in May, we may get more clarity and we may get this new sort of goalpost later down the line that could actually make people a bit more optimistic. And Ethereum's still got a lot of catching up to do. All right, thanks for watching. We'll catch you all next week.